Have you ever imagined what you would do with $1 million? You'd definitely be set for life, but do you ever consider ways to increase your wealth and save more? Welcome to the world of the wise and wealthy, where money and savings are the only words spoken. You may be wondering how you build wealth from all that money. It can be a little difficult, but don't worry, we've got you covered. 10. Get a steady source of income. Without a consistent source of income, it isn't easy to create wealth from scratch. You can only invest if you save money, and you can only save if you have a regular income. This is to say that people do not build long-term wealth through multi-level marketing, Ponzi schemes, or gambling. Learn to ignore those who advocate for profit, part-time, 3-hour, per week get-rich, quick schemes. Sustainable wealth is created through long-term value creation. You can only create intrinsic value and generate income from that good or service to build lasting wealth. Therefore, if you still need a job, find a good one and hold on to it. If you run a small company, keep your attention on adding more long-term value. A consistent income stream generates funds for investments, and a viable investment gives you a chance to make money and save as much as you want. 9. Have enough insurance. Insurance is an essential item that should be included in your budget. Insuring yourself and your main assets protects you from large losses in an unfavorable event. At the very least, you should have health insurance to avoid financial ruin in the unfortunate event of a costly disease if you don't have one. Research and compare health insurance plans to find the best one. Consider house and car insurance if you own a home and a car. Consider purchasing term life insurance if you have children or dependent relatives. Building wealth is good, but losing it due to unforeseen circumstances and events is agonizing. So be proactive and ensure what is most important to you. Refrain from over-insuring. Unless there is a compelling reason to get more, stick to what is important. 8. Make extreme savings from your earnings. While making money from whatever business you're into, it is important to know that building wealth is a challenging task. Before you can think of saving money, you need to have a source of income first. This includes portioning a large number of your earnings to your savings. The earnings would sustain you, but saving a large bit of it aggressively would help you grow your wealth. You must start making some new financial habits now if you want to become an extreme saver, because it's likely that you'll break your promise to save money as soon as tempting opportunities to buy arise. Therefore, you must be self-aware of your spending if you're going to commit to a more frugal lifestyle and do away with your previous budgeting. Treat your savings funds like any other bill. You wouldn't want to let your mortgage obligations lapse, would you? Naturally, payments can get behind, but you wouldn't do it on purpose. You must approach your savings with the same way of thinking. Each month, you should budget for your mortgage or rent, your cell phone bill, other living expenses, a check to deposit into your savings account, and, ideally, a retirement fund. 7. Build an emergency fund. Now that you've learned how to save a significant portion of your income, the next step in creating wealth from nothing is to set up an emergency fund. An emergency fund functions similarly to self-funded insurance. It is money for expenses such as car repairs and unanticipated circumstances such as job loss or pandemic-induced lockdowns. When unexpected expenses and unforeseen circumstances arise, you have two options: incur debt and sell your investment, USD. You pay interest on debt, and when you sell your investment, AI, you lose both the amount and the interest earned from the market exposure if you didn't sell. To avoid these two scenarios, you should learn how to start an emergency fund as soon as possible. An emergency fund should be sufficient to cover 3 to 6 months of your monthly expenses. Also, ensure those funds are in a savings account that you can easily access when needed. An emergency fund, like insurance, will not make you wealthy, but it will keep you from selling your investments or incurring debt during an emergency. 6. Determine your financial priorities. When your career, relationship, or family life is just getting started, it can be tempting to try to juggle everything at once. Most of us have the fear of missing out while watching friends and family members purchase their ideal homes, travel to far-off places, or organize exciting weddings. In particular, when it comes to money, it's normal to want to keep up with the Joneses. When you try to do everything, it can feel like you're accomplishing nothing. So how do you successfully prioritize how you spend your money? After your expenses and income, Your goals are likely to have the greatest influence on how you allocate your savings. For example, if you know you'll need to replace your car shortly, you could start saving for it now. However, keep long-term goals in mind because your retirement planning or savings aren't intended to be used for immediate needs. 5. Avoid high fees. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. In the same way that saving just a tad bit more each year can boost your retirement savings to lofty heights, seemingly insignificant fees can have the opposite effect, eating a huge chunk out of your account over your lifetime. You could lose more than half of your finances to unnecessary fees. So, how do you ensure that your money is spent on your retirement lifestyle rather than some random investment company? One reliable method is to invest in low-cost index mutual funds. What constitutes low cost? You may wonder. A mutual fund with an expense ratio of 0.50 or less is a good buy. But the best plans offer mutual funds with an expense ratio of less than 0.20, which is even better. 4. Broaden your educational background and skill set. Now, it's very understandable that this requires money to carry out, but there's no better investment than the one put into yourself. When you invest in your education and skill set, you place yourself on a higher level of opportunities to achieve more. If you spend your life working for others, you should make yourself as valuable as possible to make the most money. Some of the best ways to demonstrate your value as an employee are to educate yourself in a wide range of fields and to develop a diverse skill set. Focus on specialized skill sets in high demand, such as those in the high-paying tech and financial industries, to give yourself the best chance of rapidly increasing your wealth. Education, they say, is wealth. It is a major catalyst for development, and if there is one thing that's synonymous with development, it's wealth. The moment you begin to broaden your education, the more your chances of becoming wealthy and putting yourself in a capacity to save more. 3. Don't be too conservative. Being overly conservative can also be detrimental in terms of limiting your wealth. Even though being overly speculative is a surefire way to jeopardize your diligently saved money. If you want to build significant wealth, you must be willing to take some financial risks, such as making more aggressive investments or establishing your own business. If you invest all of your funds in treasury bills, your real return after taxes and inflation will be negative. You can increase your chances of making an investment return by investing in stocks, real estate, businesses, or cryptocurrencies. Remember that while speculating can increase your profits, it also increases your risk. 2. Drop your living expenses. This isn't very exciting, but this is the definition of wealth. You live above your income and expect to still have money to make use of, and it's almost impossible. Hence, dropping your living expenses is the best form of help you can give yourself. Expenses should always be within your income. The greater the gap, the more wealth you can amass. You can't invest unless you have money to invest with. You will only build wealth if you live within your means and have extra money to put to work. 1. Try real estate. Real estate investing will not make you wealthy overnight, but it will increase your net worth faster than many other traditional investments. For example, buying a fixer-upper house, rehabbing it, and reselling it for a profit can result in a sizable profit if done correctly. Just remember to buy low, rehab smartly, and sell quickly. House flipping, as the process is known, is largely a math game, and those willing to take on the challenge can make significant profits. Purchasing multifamily properties with significant monthly cash flow is another strategy to help you add wealth quickly through real estate. This cash flow can be saved and reinvested into new deals, creating a domino effect allowing you to grow your real estate portfolio exponentially. The world is changing. Everyone is profiting from their investments, and young people are becoming billionaires daily. So how will you amass your wealth and leave a legacy? By purchasing real estate or establishing financial priority? It's entirely up to you. Let us know which you prefer in the comment below.